on a day like this when it seems Powell is going to give us something to go with, at least to get us to stop selling. Dan, the question is, which in your list of coverage is the best buy right now?
My opinion, this tech sell-off, I think a lot of it is more fear-driven than fundamental. And I think that continues to be what we're talking about. I mean, in Asia, demand to supply is 15-1 for Blackwell. Last time we were there, it's 12-1. So when I look at semis, you look at names like Nvidia, you look at software in terms of some of the hyperscalers, you look at names, really across what I view as sort of the AI revolution names, Palantir among them, cybersecurity. I think these are the names that you own here playing the theme. The theme is not cracking. That's more perception.
Okay. What did you learn from GTC and Nvidia yesterday and Jensen Huang? Dan, please correct me if I'm wrong. It seemed like it was generally kind of an update on themes we mostly knew about and some pretty impressive numbers of how fast their chips are running. But was there anything additional?
Well, first of all, I think being at GTC in terms of our team there, I mean, the developer feedback, it's off the charts. So I think it all comes down to the use cases, and those are exploding. In terms of Jensen's keynote, I think it's really showing the holy grail is physical AI, autonomous robotics. Clearly talking about Rubin, some other sort of initiatives down the road, but look, they own AI when it comes to from a chip perspective. And I think that is sort of planting the flag, showing that, like, despite all the fears, some of the deep sea wounds and everything else, that's sort of Jensen out there, hearing from the godfather of AI himself saying, look, it's our world, everyone else paying rent.
Okay. All right. So Nvidia then, in terms of market leadership, I mean, this thing trades at a PEG ratio below 1. So the valuation argument is not a bearish one, right?
Oh,
bullish, if anything.
I'd say it's cheap. I mean, relative, like when you look at it, if you believe, and all of our work shows that we're in year 3 of a 10-year build out, Nvidia is cheap. I mean, I continue to think this is going to be a $4 trillion and eventually $5 trillion market cap, and that's our view. I think you got to take the noise out. I mean, you've talked about it over the years. I think in periods like this, you got to look at the winners and where they're trading, what are the names to own.
Okay. As far as
Wall Street is weighing in on whether Nvidia did enough to revive the bull narrative on the chipmaker stock at its annual developer event. To start, look at the optics. During the GTC event on Tuesday, CEO Jensen Huang wore his signature black leather motorcycle jacket instead of the shiny alligator leather one he wore for a keynote at the Consumer Electronics Show earlier this year. Huang discussed the potential of powerful new AI chips like Vera Rubin and Blackwell Ultra, which could contribute to a whole new level of productivity. Huang also provided a number of significant figures regarding AI's potential. None were more significant than his forecast that by 2028, Nvidia's income from data center infrastructure will reach $1 trillion. Ultimately, though, the street appears to have anticipated it all and is now searching for genuinely novel triggers to propel one of its preferred companies forward. The main focus of Huang's presentation, according to benchmark company analyst Cody Acree, has been a few more information about what we already knew was in the works. The majority of it consisted of numerous modest, incremental details. On Tuesday, Nvidia's stock had dropped 3.4% by the end of trade. In pre-market trading on Wednesday, shares only marginally increased to $106 a share. The once hot stock has dropped 14% so far this year as the street doubts Nvidia's potential growth rate. Long-term investors want Jensen to deliver the goods and provide Nvidia with the big AI vision. Wedbush tech analyst and Nvidia bull Dan Ives stated that traders expected something more detailed in the short term, but it was unfeasible, similar to CES. We gave this lecture an A+, a turning point in the use of AI. What Huang said at Nvidia's most recent GTC presentation is being discussed more broadly by Wall Street. The majority of analysts did not alter their recommendations or price targets for the company. So what implications does this have for Nvidia's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on Nvidia stock in the comments. Your support truly helps us grow. Now, let's get back to the video.
EMJ Capital founder Eric Jackson, better known as my Nvidia analysis lifeline. Eric, good to see you, man.
Hey, Saz.
So,
good to be with you.
Yeah. Wow, GTC. I mean, Jensen goes on there. I was on set with my colleagues, Julie Hyman and Josh Lipton. As soon as Jensen came out, he came out in his old school black leather motorcycle jacket. It wasn't that alligator shiny thing he wore at CES. And I'm like, man, guys, this has got to be a bullish indicator for Nvidia. Well, no, it wasn't. I mean, we saw the stock trade down. It's not really doing much here in the pre-market today. Level set for us. What did you see at this event?
Well, I think it sort of reminded me of a lot of Apple keynotes, just both in terms of the fixation of all of us investors, financial media on this event as being kind of the be all and end all for Nvidia, but also there being this sort of knee jerk let down, oh, that's it, reaction where the stock sort of rises into the keynote and then sort of like, there was nothing new here and so forth. I mean, I thought it was chock full of lots of interesting information. Biggest thing, take a step back, is when I look at this stock, it's been flat for almost a year. Coming up May, June, it's going to be about a year that this thing has sort of treaded water just above $100 after a big rise in response to ChatGPT. And so the big question is where, what's going to take it to the next level? And I think the key coming out of the GTC keynote yesterday from Jensen was him saying, hey, we're using 100 times more information, 100 times more compute, 100 times more of our chips today than we probably expected a year ago. And that's going to continue. And so I think that was sort of like the biggest thing. And obviously, a lot of the attention yesterday in the keynote was spent on talking about the next generation of chips and just how much more powerful they're going to become, how much more efficient, how much cheaper from a total cost of ownership they're going to be to run for people that have to build out these data centers. So I think that was the biggest bullish argument for Nvidia bulls coming out of the keynote.
Eric, before I want to get, there's a really complicated technical stuff that Jensen laid out. Before we even get there, over the past 2 years, I would argue there's been a wave of new investors that have gotten to this market through Nvidia. And of course, they're checking Nvidia's stock price on the biggest business platform in the world. That's Yahoo Finance. Got to give a shout out to Yahoo Finance. They, I would argue, don't understand why a stock would go down when a founder of a $1 trillion company is putting out clear products that are way better than AMD, way better than Intel. Clearly, this is a company in the leadership position. Why does this happen? Like, what is the investing 101 breakdown here? Stock goes down as the company that is leading an entire market announces more stuff that will keep them in the lead for the next 10 years.
Yeah, another analogy to Apple is, I think the key question, Brian, is this one-time revenue or is this recurring revenue? And then there's going to be another layer of added revenue to come. I think there was a lot of skepticism when the iPhone came out that, you had a group of people that were mass adopting this device, but so what? Was that going to continue the next year? Was there going to be another 20% growth on top of that? Was there going to be another 30% growth the year after on top of that? Can we rely on these numbers continuing? And I think that's been the biggest thing hanging over Nvidia's stock. And that's been reflected in this sort of contracting forward PE multiple that people have put on the stock. People just haven't been sure that the 40 billion a quarter in revenues that we've gotten used to over the last year can continue and go up on top of that. So my biggest mistake, I was on this podcast, I think, 6 months ago, Brian, where I said, if you look at the last 5 years and you look at that forward PE multiple for Nvidia has been, we're now sort of way below the mean for what it's been the last 5 years. At some point, you're going to get this sort of bout of optimism where investors are all in and they think like, okay, good times are about to come. And yet we've just sort of seen this continued ticking down in the multiple. I think that's going to change at some point. And I think that's what Jensen was alluding to yesterday in the GTC keynote, is that he's saying like, hey, guys, we are way ahead, like you said, of the competition. One, these chips that we're going to be selling are way more powerful. And we are totally underestimating as a society how much compute we're going to need to kind of, respond to the AI demand that's to come in the years to come.
The crazy thing was, Eric, that I believe Intel stock went up. Like, but Intel's so. I mean, they're not even in the same stratosphere as Nvidia. I saw what Jensen came out there inking that partnership with General Motors. And I'm just thinking of this company's blowing everybody away. But you make a good point on the iPhone. You know, at the time, you know, you thought, well, we don't know about the cell phone, what it might look like, what it might do. It became a transformational project. I mean, are you in that camp that AI is not going to be transformative? I see this stuff. I see it everywhere. I see it in AI agents. I see the CEOs that I talk to, Eric, using AI agents in their various lines of communication. I see being built into infrastructure around the world. I'm surprised by the level of doubt, I guess.
Yeah, I am too. I think I'm using it more and more in my daily life. I think most people are. ChatGPT is sort of an alternative replacement for kind of traditional search. Jensen was kind of sort of pointing out in a couple of comments yesterday. Hey, do you notice that there's more of a delay when you use ChatGPT over the last couple of months? That's because there's such a surge in demand for this stuff. So yeah, I think it's a show me story. Like people, as much as, it's nice that they can talk about it. We inked this partnership with GM, or they trotted out the, I think his name was Blue, the robot at the end of the keynote as sort of like, hey, this is where things are going and physical AI and all that.
They had robots shaking people's hand at the event. I mean, I was watching some posts on X, Eric. I mean, there's a robot, put it out his hand or her hand or a hand, shaking hands of people. I'm like, I get what he's talking about in robots. I get it.
Yeah.
The next generation Blackwell Ultra, Rubin, and Rubin Ultra architectures were updated during the GTC keynote. Dynamo, NVDA's inferencing software for optimizing reasoning models in data centers, was also introduced at the keynote and dubbed the operating system for AI factories. As anticipated, Mr. Huang also discussed scale-out networking when he formally unveiled the Quantum X and Spectrum X switches, which are silicon photonics co-packaged optics. Regarding business infrastructure, NVDA unveiled the DGX Spark and DGX Station PCs, which provide AI functionality and performance in a desktop design. The goal of ongoing full-stack infrastructure development is to advance agentic AI and reasoning models, which NVDA predicts will result in 10 to 100x computing intensity. We still see NVDA's AI infrastructure innovation favorably in the context of the larger accelerated computing industry, which is expected to push data center capital expenditures to about $1 trillion a year by the end of the decade. Today, Jensen Huang gave the keynote address at GTC. 3 crucial points immediately stood out to us. 1. As inference and training continue to demand more computing power, Nvidia is expanding its total addressable market forecasts, with total annual capital expenditures expected to exceed $1 trillion by 2028. 2. In addition to getting back on track, Blackwell is surpassing projections. In 2025, the number of units, individual deaths, from the top 4 U.S. hyperscalers will reach 3.6 million, which is 2.8 times higher than Hopper's peak year. 3. With a lightning-fast compute roadmap, B300, Rubin Ultra, software leadership, e.g. Dynamo, and networking innovation, CPO, the company reminded investors that it is leading inference and is not letting up. Net, we left the keynote feeling confident in NVIDIA's leadership, which appears to be growing. We see favorably NVIDIA's push on inference, which, according to company statements, now necessitates a lot more computing power. With statements that were mostly in line with pre-event expectations, NVIDIA CEO Jensen Huang opened GTC with a keynote address. We would emphasize the following important lessons, such as 1. The Blackwell Ultra, GB300, NVL72 was announced. It is anticipated to be ready in 2H25 and will have 1.5 times the performance of the GB200 NVL72. 2. Announced the Vera Rubin NVL144, which is the next-generation ARM-based CPU and the next-generation GPU. It has 144 GPUs per rack and is anticipated to ship in the second half of the year with a performance of 3.3x GB300 NVL72 and expected 2H26. 3. Announced the co-packaged optical CPO at 1.6T. Other observations from GTC are as follows. 1. Blackwell Ultra, GB300, uses the same rack architecture as GB200, so we anticipate a fairly smooth transition. And 2. NVDA continues to push the envelope on performance with its annual cadence roadmap, so that it remains the clear leader in AI. in our opinion. To stay informed about the latest developments from Nvidia and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on Nvidia stock, so please share your opinions in the comments below. Now, let's dive into today's video.
That's fine. I think with iPhone though, like two things happened. People eventually realized, wow, this thing effectively is like a subscription because whether it's a 2-year upgrade cycle or 3-year upgrade cycle for people, I mean, eventually everybody's going to keep re-upping and buying the next generation of this device. So effectively, they're on a subscription plan. And then the services got layered on top of that. So I think Jensen was trying to say, hey, you're going to be hooked on these chips. You're hooked on Blackwell. You're going to get hooked on Rubin because it's so much more powerful and more cost efficient to run it. And he was kind of almost dissing like why would you want to buy a Hopper when you can buy the latest Blackwell chip, when you can buy the Rubin chip to come. And I know you'd pointed out, I think, Brian, that maybe he's going to make some comments about China and how they're going to handle export controls. He didn't say anything explicitly, as you know, but that comment about like why would you want to buy Hopper? In a way, it was sort of like a wink, wink to like I'm sure everybody, whether they're in China or other countries around the world, are going to do everything they can, move heaven and earth to kind of get their hands on these latest chips. So that's to come. Is there going to be like an equivalent of iPhone services to layer on top of NVIDIA? I mean, that could be the robots. That could be the autonomous driving. It could be, something like that. The CUDA was obviously sort of taking center stage there and sort of saying, look, hey, this is another reason why we're different from a Broadcom. We're not just sort of pumping out somebody else's chips. Like we have like a very tight control over our ecosystem, our product roadmap, how everything all works together, and telling that story. And it is a strong, powerful story.
How many companies do you know, Eric, that can come out here on the scale of NVIDIA with the innovation they do and lay out a product roadmap through 2028?
We just haven't seen, except for maybe Apple, a company operating at this scale, with, growing top line, charting out the future for the next 10 years.
Literally charting it out, literally putting on a screen in front of 17,000 people. Here's our product roadmap. Intel, if you can beat this, go give it a try, dude.
Right, with a hockey stick.
Yeah. Yep.
Like this is where we're going.
The next generation Blackwell Ultra, Rubin, and Rubin Ultra architectures were updated during the GTC keynote. Dynamo, NVDA's inferencing software for optimizing reasoning models in data centers, was also introduced at the keynote and dubbed the operating system for AI factories. As anticipated, Mr. Huang also discussed scale-out networking when he formally unveiled the Quantum X and Spectrum X switches, which are silicon photonics co-packaged optics. Regarding business infrastructure, NVDA unveiled the DGX Spark and DGX Station PCs, which provide AI functionality and performance in a desktop design. The goal of ongoing full-stack infrastructure development is to advance agentic AI and reasoning models, which NVDA predicts will result in 10 to 100x computing intensity. We still see NVDA's AI infrastructure innovation favorably in the context of the larger accelerated computing industry, which is expected to push data center capital expenditures to about $1 trillion a year by the end of the decade. Today, Jensen Huang gave the keynote address at GTC. 3 crucial points immediately stood out to us. 1. As inference and training continue to demand more computing power, NVIDIA is expanding its total addressable market forecasts, with total annual capital expenditures expected to exceed $1 trillion by 2028. 2. In addition to getting back on track, Blackwell is surpassing projections. In 2025, the number of units, individual deaths, from the top 4 U.S. hyperscalers will reach 3.6 million, which is 2.8 times higher than Hopper's peak year. 3. With a lightning-fast compute roadmap, B300, Rubin Ultra, software leadership, e.g. Dynamo, and networking innovation, CPO, the company reminded investors that it is leading inference and is not letting up. Net, we left the keynote feeling confident in NVIDIA's leadership, which appears to be growing. We see favorably NVIDIA's push on inference, which, according to company statements, now necessitates a lot more computing power. With statements that were mostly in line with pre-event expectations, Nvidia CEO Jensen Huang opened GTC with a keynote address. We would emphasize the following important lessons, such as 1. The Blackwell Ultra, GB300, NVL72 was announced. It is anticipated to be ready in 2H25 and will have 1.5 times the performance of the GB200 NVL72. 2. Announced the Vera Rubin NVL144, which is the next-generation ARM-based CPU and the next-generation GPU. It has 144 GPUs per rack and is anticipated to ship in the second half of the year with a performance of 3.3x GB300 NVL72 and expected 2H26. 3. Announced the co-packaged optical CPO at 1.6T. Other observations from GTC are as follows. 1. Blackwell Ultra, GB300, uses the same rack architecture as GB200, so we anticipate a fairly smooth transition. And 2. NVDA continues to push the envelope on performance with its annual cadence roadmap, so that it remains the clear leader in AI, in our opinion. To stay informed about the latest developments from Nvidia and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on Nvidia stock, so please share your opinions in the comments below. Now, let's dive into today's video.
Kevin Green joins us for a look at the market, which has had a very uphill battle when tech is down, but we managed to find some breadth to help balance things out. On Monday, KG, yesterday, we at least saw a range develop on the intraday session. So tell me how you're viewing today's setup.
Yeah, and we're breaking out of that range right now here, Oliver. I think going into this meeting, barring any type of news that hits the market, I do believe that we probably will be range bound. We will define a range and then kind of stay within that until we get the summary of economic projections, and then obviously the commentary coming from Powell. So if you're kind of looking at it to the upside here today, especially on the longer term time frame, we actually have this kind of like wedge pattern that has taken place here pretty much since Monday of last week. And so you want to kind of maintain in that wedge and then kind of break out to the upside here. Still some areas of resistance at that gap, 57.04 to 57.30, give or take some points there, and then also that 200-day moving average. So I do believe we probably will see either break out to the upside or break down here over the next couple of trading sessions here. It would be very odd for us to kind of stay or remain in this range, especially bulls can't really kind of gain a little bit of steam, as you kind of talked about in the opening here. So breadth is expanding here today. RSI is trying to make higher highs and hopefully higher lows, and that'll give you the signal for some buying activity. And for the bears, once again, I mean, they were able to come out yesterday. Probably not the best short zone for the bears. Probably that short zone would be testing that gap. Once that gap gets filled, or if it does, maybe shorts coming in and trying to knock the market back down there.
Okay. The bounce or lack of selling since the lows, how does that look in your mind, KG? Does it look like a platform for us to rally, or does it look like just kind of a needed reset and establishment of two-way trade versus one-way downside?
Yeah, I think it's enough for us to be able to try to rally higher for now, but I think it's going to be a counter trend rally. So meaning that the trend right now is to the downside. We might be able to rally up, maybe even get half back or a 50% retracement from highs to lows, which actually would be a pretty decent deal. But once again, I think over the longer term, over the next couple of months here, we probably still will get knocked down. And actually, the reason why I kind of bring this up here is the fact that we actually look at the E-mini S&P 500 on a longer term time frame. What I actually am looking for, maybe today, if we get a sell-off, but probably over the next 2 or 3 trading sessions, is the cross between the 20-period moving average below the 200-day moving average. Now, that's not technically the death cross that people usually follow. They usually follow the 50-day to 200-day, but it is actually a very meaningful cross that we have seen pullbacks kind of coincide with in the past. And actually, if you kind of look at it, usually when they do happen, they're on counter trend bounces to the upside. and then the cross occurs, and that's when we kind of pull back to the downside here. So it's a daily chart, long-term chart here, but you can kind of see when these crosses actually do occur. We got very close actually in October of last year, but we were able to kind of skip and kind of move that 20-period moving average back to the upside. And the reason for that is actually between the October bottom to the end of the year, we actually saw around 15 and a half or 16-point move to the upside. That's the type of trajectory that we're going to need in order for us to kind of avoid this cross. And if you kind of go back over the last couple of years here, Oliver, we saw the same type of formation in February. I have that highlighted in February 2022. We had a pullback to the downside. We had March 2020 had a pullback to the downside here. You can look at March 2018, same. October 2018, December 2015, August 2015. All of those actually did coincide with at least another 13% move to the downside after this cross. So this one is actually a big one on the longer time frame that I'm keeping my eye out on. Even though in the near term, maybe even today, get some positive commentary. Maybe the market does rally. Longer term, we're starting to still see some technical breaking down of the S&P 500, and these longer term trends are starting to develop for more of a bearish move over the next couple of weeks and months.